Hong Kong exchanges and clearing reported a 13% decline in profit as revenue tumbled amid decreased market activity. First quarter profit for the bourse operator stood at $2.97 billion. While it paled in comparison to the same period last year, it was a 14% improvement from the fourth quarter of 2023. Revenue totaled $5.2 billion, down 6% from a year ago when the economy rebounded after COVID restrictions were scrapped. On a quarterly basis, revenue was up 7%. The drop in revenue could be attributed to lower fee income as turnover dropped by 22% year-on-year to just under $100 billion per daily session. A sharp decline in new share listings also led to a 25% dip in listing fees. The situation was compounded by an 8% rise in operating expenses driven by higher staff costs. But there were also positive signs. Derivatives trading increased 14% in the first quarter, reaching 855,000 contracts a day. Northbound trades under the Stock Connect scheme increased 37% with a daily turnover of 133 billion yuan. But southbound transactions fell 17% with a daily average of only $31 billion. Northbound bond transactions, meanwhile, achieved a quarterly record with an average daily turnover of 45.2 billion yuan, a 22% rise. Investors reacted positively to the news, with shares of the company climbing 3.6% by end of day. Chief Executive Bonnie Chan, who took over from Nicholas Agudzen last month, expressed optimism going forward despite a challenging global environment. She said the operator's future remains bright, citing its ability to pivot on China's long-term growth as well as emerging opportunities in Southeast Asia and the Middle East. Cheryl Yun, Cable News.